Okay, welcome back to the channel. Quick video on Vault resources. So just quickly, I follow natural graphite stocks the most because there's going to be a lot of demand for natural graphite and possibly a shortfall, meaning the price for natural graphite will go up. My belief is we're slowly but surely going to electric vehicles, year by year, day by day. Tesla, BYD are going to get cheaper at making them. Tesla's coming out with a new platform that's going to be even cheaper to make their cars, and they're going to improve everything and get the prices down, and we'll slowly head towards electric vehicles. Put solar panels on the roof, charge it for free. Yeah, just better in my opinion. That's the most I'll say about are we going to electric vehicles. Next thing is is graphite going to be in the battery? Yes, I believe so. I think the batteries we have now are good enough. If you watch Jeff Don, especially this video here, he can make these batteries go forever, 1,000,000 miles, so outlast the car, both with LFP and NMC. So that's the what I'll say for will graphite stay in the battery. Yes, something can come out of nowhere. Sodium ion is probably going to be a big thing, but it's not there yet, and I think the lithium ion battery is quite good, and we just need to get it cheaper. So that's all I'll say for that. So moving along, for Vault resources, what do you get? So basically, to buy the whole company today for 42 million, and it comes with 10 million cash, and then you got this mine in Ukraine, which was making probably 5 to 10 million a year. Obviously there's a war in Ukraine, so it's been shut down, so you might just want to write that off like it doesn't exist. But if it does come back good, just a bonus. They could make 10 million a year or something, and then they could spend a little. It's already existing, so they just have to do the upgrades, which won't cost as much as building a whole mine. Everything's already there, so maybe they spend 50 million and then they do 100 million a year in EBITDA, doing 100,000 tons per year, making $1,000 a ton profit, and then maybe they're making 3,000 ton profit if graphite goes shortfall and the prices go a little bit like lithium. But anyway, we'll just write that off as if it doesn't exist, because who knows what's happening with the war. Then we'll look at this project here. So this is in Tanzania. Basically it's got 20-year mine life, making $200 million a year before tax, before costs, and then you got costs, so maybe $100 million a year at the proposed prices. So they've got two stages, so they can do the first stage first, only raising 31 million, and then they make $13 million a year EBITDA. So they get that going, and then they probably say, yeah, we're making money here, can you give us that money at better terms? So they don't have to dilute when they do the next stage of the project, which is raising $173 million and then making $195 million in EBITDA per year. At these prices, if these prices go up, then this goes up, and then your share price also goes up. So if we didn't say we're not in the graphite shortfall yet, it's probably not to mid to late decade that it really starts going. Yeah, so basically these companies, so always look at the capex, because remember, you have to raise that money, and whoever is giving you that money wants to slice the pie. The lower this number, the lower the dilution. So you want to compare eggs with eggs. Always look at the capex. If this company can make this much per year and the capex is lower, it's definitely way better than someone making around the same per year with double the capex, in my opinion, and I believe I am correct. So they also do have these little lithium projects around as well. We'll start at the top, shall we? This thing. I think they got a new director, non-executive chairman. Vault team. Coming down the market. So if you're watching, you might want to just put supply demand for graphite into Google and see what you get. They're predicting shortfalls 2025, 2026, and then it'll get even worse the later we go into the decade. And I do believe natural graphite will be in the batteries of choice for the next decade, if not beyond. That's my opinion. So yeah, there's a graphite shortfall here. Synthetic graphite. So there's synthetic graphite, which is made from petroleum coke, and there's natural graphite. They believe it's going to be a 50-50 blend in the battery. Price already rose in 2022, 25%. Lithium prices rose 500% when it went shortfall, so who knows what will happen to graphite. Could be a bit different to lithium. Okay, so moving down, that didn't say a shortfall, but there, if you look at other charts, there's a shortfall coming and looks like that for graphite. Moving down, our strategy, telling you the strategy. So you got lithium here. Rio Tinto was trying to get a lithium thing going there for years and years, never happened. So don't even believe that exists if you invest in a company. Not sure. Gold there, who cares about gold? Not me. Ukraine, hope things go well, and then if that really turns around, you'll see a big boost to the share price and profitability of Volt. So yes, so if I didn't tell you, this one in Ukraine, it's got a lot of tons, and it's not JORC resource, so you need a JORC resource for the ASX, saying we drilled it this many times, but they have a big resource there. It's just not done to this standard, so they can't say they got this many tons in the ground, etc. But we're writing that off because who knows what's happening with the war. So yeah, this is 22-year mine life, doing 22-year mine life, making $100 million a year after all costs. So I'm just going to say they make that in EBITDA, $195 million, then they make half that, so they make $100 million. So $100 million for 22 years for a company you can buy today for $40 million, and then you have to raise that initial $200 million to get it going. So can I get back to that page? So that's them. Only 100 million, 100 kilometers to port. Much better than something that's 500 kilometers to port, because it's going to cost a lot more to build and a lot more. Not to say you can do well, but I'd rather low capex. You want something you don't have to spend much on to make the same amount of money as everyone else. Ideal for the lithium-ion battery, and they're not only going to get it out of the ground, they're going to send it to America, and they have downstream plants in America too. So companies like Magnus do the same thing. They're now $500 million market cap. So if Volt brings out those announcements, could see something like that as well. Breaking news. And this one here, Rio Tinto have a massive thing here, but they're not sure. I don't even think they can build it because everyone's like, no, we don't want that in our neighborhood. Moving along. Anode plant. So they want to go downstream, expansion. Thank you. And that's it for this video. Thank you very much.